Hi, everyone, and welcome to the Financial Fox, Investing and Innovation Ideas with a Twist. Today is Smart Investing, Crypto, Stock and Shares with Clem Chambers and Zach Meir. So we have a lot to talk, so welcome you both on the show. And let's get this show started.
I've never seen you smile so much, actually, Steffi. Are you okay?
Yeah, I'm fine. I've got thesis, right? I think that last year in May, crypto was going up, the stock market, was going up, gold was going up. So I think we are kind of at that stage now. So that's why I'm smiling, because I think there are so many opportunities for us to make money.
Well, I think Steffi is suffering from something that's meant to be really bad in investing, but I suffer from, which is I'm as happy or as sad as the market direction. So if I'm making money, I'm really happy. The day I lose a big chunk of cash, I'm very sad. And, that's the game, isn't it? And the game that we play, when you win, you're happy. And when you lose, you're sad, even though every day's a different day.
Yeah, exactly. So Clem, maybe let's start with you, because big news in crypto land. We have the first ETF future start trading in the US, and there are lots of talks happening about Bitcoin going to $100,000. Everything is
millions and billions and trillions.
Exactly, that's where it's going. DeFi, based on the article that you wrote for Forbes recently, is basically the place where people can make more money. But tell me a bit about the sentiment that you have in crypto, because you were quite bearish, a few months ago.
I'm still medium-term bearish, and at the end of the day, I like to buy cheap and sell not cheap. I don't even want to sell high. I want to buy low and I want to sell high. And I sold high, and now it's even higher. And that stuff happens. Now, what I think, and I'm bearish, I'm very bearish. Well, I'm quite bearish. The market is bullish. The market wants it to go up. And I've done several articles for Forbes and Seeking Alpha. I say, this is the bear case and this is the bull case. And I wrote one just recently. I said, I'm not going to even draw the bear case because the market's bullish. And this is the bull case, and this is what that looks like. Because every time I drew both of them, it was the bull case that kicked off. And I'm going, I'm a bear, but if you're a bull, this is what's going to happen. And it happened. So the market is bullish. The market is strong, even though I think it's misguided. Who am I to say? But if you think stuff is too expensive, don't play. And I haven't been playing in the main cryptos. I've been playing a little bit in the small cryptos, where there's a lot of pop there, where you can. Yesterday was one called Assembly, and I bought it at 7 cents and sold it this morning at 11. Well, that's quite a lot of dollars on a Bitcoin. But on a small coin that's going to get listed on CoinMarketCap in a few days, that's an easy thing to do. So I can de-risk. I don't have to go all in on a crazy stampeding elephant when I can back a few fast mice and make the same money at much less risk. So that's where I'm at. And I still think that, Bitcoin is a dangerous game. It can easily go to 80 from here. But from 64 to 80, that's like my crazy little mouse going from 6 to 7. So I prefer to have bigger pop and smaller positions than gigantic positions with less pop, particularly when you're dealing with a wild beast like Bitcoin or Ethereum. So that's how I feel about it. Market is very bullish. I don't want to get caught up in that particular chipping machine by accident.
Yeah, so I would say that I totally disagree with Clem, even though I appreciate what he's saying. I think every factor that is good for Bitcoin and the cryptos is in place. We're in this inflationary environment. We've got probably supply chain disasters coming up and ongoing. We've got potentially lockdown, Mark II or the second generation of lockdowns coming up as well. It's almost impossible that they won't do the lockdowns. They love all that stuff. The authoritarians that rule us, and you've had China banning Bitcoin, which is a reason to buy it, even if you go bankrupt after doing so. Just anything which is against the Chinese.
Not good investment advice, that one.
You've got HMRC trying to nudge people into declaring their Bitcoin assets, I suppose. So that's another reason for buying it, and then obviously not telling HMRC that you've done it. I'm not sure how HMRC would actually find out people's Bitcoin holdings if they haven't actually turned them back into fiat. But that's not
Depends
my
how you
problem.
bought your Bitcoin, doesn't it?
Yeah,
if you
exactly.
bought your Bitcoin through an exchange, they just knock on the door of the exchange and say, how would you like to give us all those records or get in deep trouble? And they go, oh yes, here's the records.
Yes, so that's I suppose that's a little bit of a negative on being involved in the Bitcoin rat race. But basically everything there is a risk play, uncertainty play, a modern gold play. All those things I think are in focus at the moment. And I think I do agree with Clem that obviously 64,000 to 80,000 doesn't look that particularly appealing. But there are plenty of other smaller cryptos, numerically small cryptos, and even Ethereum is much a more relaxing ride, and you've got plenty to choose from there, or Ripple, or whatever you want to do. So I don't think it's a problem at all. But it just seems to be, I think that it's gone mainstream. You've got all the young people in the crypto area, i.e. under 30, etc. For them, it's just like buying stocks and shares. And
well, I'm going to interrupt you now, Zach, because it's not mainstream, which is yet another reason why it's going to go up, because it's really still only in the margin. And most, if you stop 100 people in the street and say, are you mucking about in crypto, they will say, oh no. And particularly the moneyed end of the investment world, which is old fogies like us, who are not technically up to speed enough to actually play in this sandbox. So going mainstream, that really is the long-term upside. And I'm a great believer in long-term upside. I'm a great believer in Bitcoin way higher than this in due course. But at the moment, I mean, I kind of got it right, because I said 60,000 too high. It's going to go down to under 20. Well, it went down under 30, and then something changed.
Yeah.
And now it's gone on another run. And where that ends, I'm really, I look at this chart on the screen right now, and it looks like it's going to go to the moon.
Yeah, but a Bitcoin ETF is mainstream. An ETF is mainstream. The HMRC not knocking on your door is mainstream. These are all mainstream things. They don't bother when there's something HMRC don't bother.
I think you're using a different term. I think it took the internet 15 years to go mainstream. I mean, AOL wasn't mainstream. Today it's mainstream. VCRs took however many years they were to go mainstream. Mainstream is a sort of fast-moving consumer market idea of mainstream is not.
But when did ADVFN go mainstream? When it came to market? Or?
Never. It's never. Stocks and shares are no longer mainstream. Yeah, television is mainstream, and mobile phones are mainstream. That's when every other person has one. If you go to the marketing definition of mainstream, which is the one that I like to think I'm using, it's not some niche down the corner which your granny doesn't know about. Your granny's got involved. That is mainstream, and of course that's hugely wider than where we are now, and it will go mainstream. I mean, paper money is mainstream. Coins are in your pocket are mainstream, but luncheon vouchers aren't mainstream. Travelers checks were never mainstream. Postage stamps are mainstream. Yeah, FedEx isn't mainstream. Real mainstream stuff is just a vast market, and crypto is going there. But it'll probably take another 10 years. But when it is there, then that will be a completely different environment that we're in now. And that's what's so exciting about crypto. In the short term, I think it's, I'm not following the logic. I think it's FOMO from corporates. Because if you look at Google Trends, you'll note that the actual interest on Google Trends has dropped off dramatically from the high. But the price doesn't reflect that. So it's not the man in the street Googling Bitcoin that's doing it. It's the corporates, I believe, which are FOMOing in. And who knows how long that will carry on. And then maybe when the government's FOMO in, maybe they'll squish it. Maybe they'll send it through the roof. I think it's we know it's a very volatile environment. You can see that day to day. You can see it going to the moon and crashing to the ground. So that's what everybody loves about it. And right now, the market is rampantly bullish. But how long that will carry on, it could easily go to 80, 90,000 for sure. But it could easily then, you could wake up the next day and it's be 40,000.
I've got a question for you, just on that note.
Let me just jump in, because I think one of the main catalysts will be, I mean, we just seen a future ETF being approved. What about if Grayscale is going to manage to list this fund as an ETF on the spot price of Bitcoin?
Well, let me ask you this. how much does the gold ETF affect the gold price? It's a fraction of the liquidity of gold. How much does even the SPY affect the S&P 500 index in terms of how much its overall value is? It's influential, but not massively influential. A future ETF is a decaying value asset, because they have to buy a past contract, a futures contract at a contango, and that contango disappears. So the value drains out, and they have to keep flipping into earlier and earlier contracts as those contracts decay. So it's not a long-term tracker. It's a short-term speculative vehicle that loses value over medium and long term. Yeah. So it's not a way of holding Bitcoin as a hodl. In fact, it's disastrous for that. Exactly. So, you know, people's excitement about an ETF future is probably misplaced, but it doesn't stop the market going up.
But what about, Clem, if the Bitcoin on spot price is going to be approved, the grayscale one?
Well, I mean, that would also be good, but I refer you to my earlier point about the gold ETF.
Yeah.
And how much of there's $500 billion in the SPY ETF, and there's $25 trillion worth of S&P 500 companies. So it's only 4% of the actual float of the asset is in the ETF. So remember, Bitcoin is now $1.3 trillion asset. It's a apple in size. It's a big ass thing. And, you know, for it to go double, it has to add $1.5 trillion of value, which would bring it to a third of the value of all the gold on Earth, including all the gold in Fort Knox. That's a heavy weight to lift under certain circumstances. So, you know, I would be saying that about Apple when it was a $800 billion company. I'd say, well, I'm lifting that. That's difficult. Well, here it is, and it's now a $2 trillion company. So in an environment of vast liquidity and speculative energies and free money, you know, it's a very difficult environment to predict. And when it's cheap, like it was at when I was shouting from the rooftops, buy Bitcoin, that made sense because it was cheap. Well, now it's not cheap. And the less cheap it gets, the more dangerous it is to hold, in my book, because I buy cheap and I sell not cheap. I don't even sell expensive. I like to buy cheap and sell when I don't think it's cheap anymore. Then you're in
the real estate thing. It's just like buying London real estate. You know, there's a flat for £2 million and you're wanting it to go to £4 million. I mean, it's that kind of horror that Bitcoin is in at the moment.
Yeah, well, it's
a very sought after commodity, but it's very, very expensive. And what do you do then? I mean, that's quite a conundrum, isn't it, really?
Well, you look for a burnt down property that's at 750,000.
And you have to
fix it up for 100.
Or you burn one down and then make an offer, I suppose. But and I just had one question.
Well done, Corleone. That's
I had a question for you about there's a stock called Quantum Blockchain, and I think they're applying for a patent on quantum computing. And if you know what it's QBT, if you know what the situation, how quantum computing could affect the Bitcoin mining, etc.
I've got a problem with quantum computing in that I think it will be the biggest technological breakthrough in 20 years' time. Very much like nuclear fission. Is it fusion? Sorry, nuclear fusion is going to be a big thing. We're building a bigger one. We're building an even bigger one. And in 10 years' time, it's going to be huge. And that was 20 years ago. And they're still going to build one, and they're still going to build one. It's still not working. And I've got a suspicion, just mathematically based, that as you try to get your qubits going out, it gets harder and harder. So you actually have a mathematical breakdown limit to what you can do with quantum computing. So I think it's like nuclear fusion, if I got the right one the right way around. It's always going to be the next big thing in 20 years.
Nuclear fission, I think. Cold fusion. There was cold fusion.
Fusion. I'm talking about fusion. Yeah. Tokamaks and all that. We're going to build one in Wales, but they haven't even got one to work yet. But they were going to build one in Wales, and Wales didn't get it. Oh dear. But yeah, fusion, hot fusion, cold fusion. Don't care. I mean, that's what got Woodford in trouble, right? He backed to the tune of millions of dollars cold fusion. Hello? Don't we all know that that's a con? But anyway, outside of Woodford's ability to fund scams, or ability to fund them, I've just got a funny feeling about quantum. for one reason and another, that as you get more and more qubits, the accuracy drops and drops and drops and drops. So you get a sort of stochastic decay. Oh, sorry, I'm going to get technical here. I don't think it's going to work.
Clem, Zach, what about Ethereum? Because we talk about Bitcoin, but I really want to talk about Ethereum as well.
Well, it's very interesting. We've got these charts up here, and you're looking at Bitcoin and Ethereum and everything else. Bitcoin is doing its own thing, and now Ethereum is following it. And again, that's an incredibly strong chart. I mean, it looks like it's got another $1,000 a coin in on it. And I've accidentally got quite a lot of Ethereum. But if it wasn't doing something, I would be selling it right now. But they're doing this proof of stake thing, and I've been in software development for so many years that I would be losing a lot of sleep. Well, they probably are losing a lot of sleep, and there's so much risk there. There's so much potential for unintended consequences. But anyway, the market says it's going up. So you either jump on board and take a ride, or you stand aside and put your fingers in your ear and wish everybody good luck. Good luck, everybody.
Zach, listen, you mentioned a few other coin in our past session. Is anyone else that you are kind of following?
Well, no. I mean, I think I was saying, for the sake of example, an example that if you think that Bitcoin's too chunky, you would just go for one of the smaller ones, the ones which are $1 or $2 or a few cents, and just play it like that, because that's normally you get a trickle down from the largest to the smallest, and one would expect that now. So
yeah, you're seeing it now, right, with Ethereum. I mean, Bitcoin's gone up and Ethereum's following it. So next would be Solana or Avalanche or whatever. But if you don't know why you're doing it, you shouldn't do it. If you're absolutely sure that what you're doing is a great idea, then you do it. And if you're doing it for fun and giggles, then sure, that's great fun. But I think you've really got to be digging in. Well, if you're speculating, if you're looking at charts and you're trading the pixel on the end, it's all good fun, and people do that all the time. And good luck with that. And you can make it. I did exactly that yesterday with this arena thing that's been AVM. I can't even remember what it's called. Yeah, but it got announced yesterday that it's going to be listed on Coinbase, and I made a 50% on that. But I've forgotten it now, and I won't go back, because I had a reason that I knew right from the second of it being about to go on Coinbase, or be announced to go on Coinbase, it was going to go. So I jumped on it. I knew why I was doing it. I knew what risks I was taking. It panned out rather than kick me up the backside. I took my profit this morning. I've forgotten it exists now.
Yeah.
And assembly. There you go. Assembly. And that's how you got to play it. It's a skill game. This is like playing tennis rather than being a farmer. I prefer to be a farmer.
And just remind me so just both of you could just remind me what platforms you like, because I think we discussed it before, but just I keep forgetting.
Well, I mean, it depends what you mean by like. I don't like any of them. I think they're all high risk. I mean, Coinbase is a very poorly run site that gets has terrible customer services. You try to change your address and they close your account because they can't be bothered to go through the process of changing your address. That's how poor they are. And Binance, well, they're super spicy. Wonderful site. Oh, fabulous offering they've got there. But I mean, I think they're getting chased around the world by about more regulators than you wave a stick at. So it's all Wild West. It's like, what's the best chill out room in Dodge City?
Yeah, but I mean, I've got a Revolut account. Is it better just to trade it through there? Just like whatever.
Yeah, but you can't get it out. It's not yours. It's just an entry, paper entry. So you can't put your Bitcoin in your wallet and head out to Afghan airport and leg it out.
So it's just like a derivative. It's just like a derivative.
Who knows what it is?
Oh, really?
Who knows what it is? Do they tell you what the wallet is and where it's held and how much of it's yours? I mean, it's totally like the banking system, right? If they get a bank run, what happens? I mean, it's just totally opaque. At least if you've got a wallet, at least if you're on a Binance or even a Coinbase or a Bittrex or a South Exchange or any one of those guys, you can say, please give me my Bitcoin now. and you wait a few minutes, and there it is. What could be better?
Exactly.
But you know, when you go to these banks, PayPal, I own Bitcoin in PayPal. Well, give me my Bitcoin. Oh no. Can I put my Bitcoin in? Oh no. Can I give you dollars for Bitcoin?
It's a contract for difference, basically.
Well, it feels like it.
And so, I mean, is there any? I mean, apart from this and one or two other things, I don't really, go into the crypto area. But is it a place that you would say there's proper advice on trading crypto or opening an
proper
account?
advice, I don't know about that, Zach. I think the best probably way, following up on Clem points, is just to get your MetaMask wallet and then just play that way. So
who wallet?
Steffi has absolutely nailed it. Right? There's only one way to play this game, and that is to take a small amount of money, whatever small amount of money for you, whatever you're prepared to lose, a couple £100, a couple £1,000, 50,000 if you're a rich man, and go play with it, and use that money to learn the system. Do it in small amounts, because you can go onto Coinbase and you can buy $2 of Bitcoin. And you can do this all on such a small scale, a smaller scale than you up to very recently. You couldn't do it with equities. I mean, with Robinhood you can do it now because it doesn't cost you anything. But you still can buy £5 worth of Ethereum on a South Exchange, for example, or £1, or of 10p, and just learn it, just get it, just buy some Bitcoin, buy some Ethereum, buy tokens, just play with it for 100 or 2 pounds or dollars. And keep playing with it until you suddenly go, oh, I got it. Oh, so it's Montessori. You absolutely have got to do it. It's the same with equities, Zach, isn't it? I mean, you can't tell people how to do it properly, because ultimately we know so much over so many years. There's so many axioms we automatically look at and don't even think about that informs us, that it's hard to tell anybody. You tell somebody, do this, right, and you're right, and they lose money. And you go, but you didn't do that. And you didn't do this, and you did it that way. Oh, why would you do that? So you have to just pull out a set of money that you will afford to spend on education, and that education is actually doing it.
Yeah, I just wanna share something that I was talking with a broker and talking about investment, ideas and strategy, and he was talking about that. Something that would be really good to get in right now is bonds. And I was like horrified when he was saying that. And, I think the brokerage world it got stuck with the world of like 5 years ago that has completely changed with cryptocurrency. And when somebody is actually telling you that you should buy bonds to protect your wealth, when the
interest rates are zero, and when they go up,
I was just saying, are you serious? Do you have are you 30 or you're like 70? Or I don't know. I was just really impressed by the way that these people think they can make money, right? And another question asking them, so if what will be the safest way? And he was basically saying, the safest way would be just to keep the money in cash, which is, yes, it's the safer way because you have got access to it, but it's not the safest way, as inflation is just picking up like mad.
Yeah, well, that's 5% negative yield right there. You hold it in cash and it's worth 5% less in 12 months. So, and the next year, another 5%, and the next year, another 5%, which compounded is actually about 20%. So you sat there being safe and you lost a fifth of your money. Brilliant, eh?
It's just crazy. Zach, stock and shares, do you have any small cap to show to us?
I'm thinking about that. I'm disappointed that one of my favorites from earlier in the year, Ethereum blockchain, hasn't actually gone up with the Bitcoin. There's supposed to be a slight play on that, although it's more financial NFTs. The other one, which also hasn't gone up back to the best levels, is Argo blockchain, the crypto miner. So I don't know if you can get the chart on that, but that is quite interesting that it has ARB. It's gone up a bit actually. It's 137 now. It's been down to about £1.10. But I think that's still the sort of the non white knuckle ride type.
I just have here online blockchain, and that just happened to be here. So, you see, even this is the situation. So, and by the way, one online blockchain has been developing in this last year, considering the amazing achievement done with Umbria Network, which is one of the DeFi project, it's just, it's just insane that, beginning of January was 100, and now after everything is done, with Umbria is still at 47. It should actually be double. It should be a 200.
I'm sure that by the end of January, it'll be back to 100 again.
Yeah, well,
I'm afraid I've got a social media policy with our nomads. I can't say things like that.
I can.
Let's go.
No, I'll have to recuse myself.
No, they actually, if the online blockchain, it looks like an inverted head and shoulders. So does actually Argo blockchain there as well. If you look at the last low and then the one before, that sort of thing. So I think they're actually ready to go, and that's why I liked actually quantum blockchain, because I think that's also ready to go nuts too. So I think that it's actually probably today's takeaway will be that there's that divergence between the stocks and the underlying, let's say, and I think that's going to play out quite nicely over Christmas. I mean, that you can see quantum is actually
that's lovely looking chart.
Yeah, exactly. So it's just like you could have a diagonal going to like 3 or 4p on that. So it really is looking very good, and I think that it's a good point that you're saying that the professionals are driving the Bitcoin to the high, but the punters are not there yet, and they'll probably be waiting for 100,000 before they get in there. I mean, I think if 100,000 is probably going to really like get everybody to buy in there.
Well, I tell you, look, I got out of Bitcoin at 32,000. I went into DeFi with a quarter of the scale, but with 4 times the alpha. So on the rise to 60, I made as much as if I'd been holding on to my Bitcoin, but with a quarter of the risk. And that for me, I feel really quite smug about that. But I've been on the sidelines since. I'm going to start smarting if it goes to 100,000. I'm going to start going,
what I was trying to say is that the good thing is that the stocks are still well behind, so that's why it's not and buying a penny stock is actually, I mean, literally a penny stock is not or 17p or whatever it is that's not painful.
Well, for sure, if this keeps running, all the rubbish will go through the roof. Because it did that about 4 months ago, and it'll do it again. The doggy coins as well will go up. But let me tell you where I live. I bought quite a lot of Centrica yesterday. How dull is that? Because Centrica, gas, that thing that's gone through the roof.
Yeah, we like Centrica. Yeah.
I know. Centrica is one of those rare shares that normally hurt me. Barclays is the other one. Whenever I do any touch Barclays, it always fights me. But I can't not buy a cheap company that owns a lot of gas production.
Oh, yeah.
And that is picking up tens and maybe even hundreds of thousands of new customers as this competition goes bust. In an environment where there isn't enough gas to go around, and they are they've now got a bit of pricing power and probably the ability to put the arm of the regulator up its back. So, I think that's quite a decent change of environment for that company. And why wouldn't it go back to 2018 levels? After all, what's changed apart from their environment for their business has just got way better.
It's a semi-monopoly as well, isn't it, Rick? I mean,
it was meant not to be, but now it is again. And I think it's one of those companies that the city has decided to despise and break up and sell.
But that's the best. That's the best time. The best time. A hated stock, on the turn is always the best, isn't it?
Yeah, absolutely. Well, that's what I specialize in. And you look very, very foolish till all of a sudden you don't.
Yes. Yeah. No, I actually covered it yesterday. I was saying 75 near term, and I'd actually forgotten that subliminally you'd mentioned it last week. And I just saw it and I thought, oh, that looks really good. And there we are. So you helped me, I think.
Well, the other one that I like, but I go, well, what the devil is that all about? Is Aviva, AV dot. And the only, AV dot. And the only trouble with it is, see, it's back to where it was before the crash.
Yeah.
That's fine. It's on a 5 PE. It's paying a, 5-6% dividend. So it should be up there at £5. It should be 10 PE. I mean, for goodness sake. So it should be £6 just to be normal. And it's not like Aviva.
Can I stop you here? Because I want you to explain this PE and the valuation compared to the dividend. I think it's important for people.
Okay. Now imagine that I am a bond villain, and I can borrow as much money as I like at the prevailing rate of bugger all. Okay. So I go to Aviva and I say, I'll buy you at £5, please. And they go, okay. And it's 8 PE. That means from the profits of that company, in 8 years, I can pay for the whole company.
Yeah.
So I just sit there, take all the profits over the next 8 years, and I own the company. I've paid off whatever money I borrowed, and I own Aviva basically for free. Yeah. PE on Aviva is 5.5, but obviously if I took it out, I'd have to give a 40% premium on that, which is another 2 PE, so that's 7. So in 7 years of profits, I can buy that company, borrow the money, take 7 years worth of profits over the next 7 years, pay off the loan, and I own it for nothing. Yeah, that's called asset stripping. And why wouldn't you do that? The only thing I'm short of is the £3 billion to do so, and maybe a mate on the board at Aviva to usher me through the door. So, it's a steal. At 12 PE, which is kind of like, more like normality, it takes me 12 years to do that, but that's worth waiting. I'm going to be around in 12 years. 15 PE, well, that's still doable, because after all, maybe I don't ever actually pay it off. I just take the fat dividends and put them in my pocket. But this thing is paying a dividend of, I think it's 5, you can probably click on it and find out, but 5%. So if I'm borrowing money at 2.5, I'm getting 5% back. So I'm getting all my interest and I'm getting capital back to pay it off. So I'm basically getting paid to own a business. I mean, what could be better? Why wouldn't you do that? If you go up to financials.
Yeah, thank you.
Click that one. Scroll down. Oh no, type in there AV dot. And then scroll down. Stop. 5.3%. So 5.3% of the whole value of that company, it's handing out every year. And if you owned it, you'd get it all, wouldn't you? And then you get all the other positive cash flow. If you scroll right down to the bottom, this is where we find out it's got horrible negative cash flow, but I don't think so. Keep going, go. More. I see all those dividends over the years. More. It makes 2.6 billion. Yeah. So the positive, so it goes retained cash flow 5, 3, 3, and then -3. So it's had 6 billion in the last 4 years of positive cash flow. So if you scroll that up, back up to the top again, and have a look at the market cap, you could buy that business, yeah, in however many 6s into 15. So in 8 years, you could buy the business. You could pay off the debt of that business that you borrowed to own it in about 8 years from positive cash flow. Yeah, so it's a steal. 5 PE is a steal. It's the business is only worth 5 times its profits, basically. Yeah. Now, if you go to something like Apple, it's 30 years. And glory stocks. I mean, type in Hargreaves Lansdown, HL dot. So their PE is 24. So you need 24 years of their profits to buy them. So it's approximately 5 times more highly valued by the amount of money it makes than Aviva, which has been going for 100 years, is a high street name, is a massive amount of business, and it's dirt cheap. Now, it's been dirt cheap forever. Same with M&G. M&G, we all know M&G. Type in M&G, MNG. Now, this is a pillar of the British financial establishment. And they would probably spank you if you dared have a PE of 4. They would say, what a rubbish company you are. We're not investing in you. We're one of the pillars of the city. Oh, whoops, we have a 4 PE ourselves. Oh dear. 9% dividend. That's almost a hilarious joke in the world of zero interest rates.
That's a lot. Yeah. Wow.
So you could buy the business for 4.5 years of its profits. I'll buy it. Just lend me 5 billion. Well, actually, I have to have a 40% premium for the city to make the shareholders let go. So that's another billion or 2 billion. So that would bring it up to a PE ratio of 5.6.
But that's madness. That seems something is broken with the valuation of these companies.
LNG, same thing. I don't get it either. And it's hilarious that it's the pillars of the city that are so good with their evaluation of public companies.
I've got an
their
explanation.
good governance.
Okay,
They can't even get themselves arrested.
Zach, go on.
They're boring and they're snooty, and that's why people don't invest in it.
They don't like their money. Does their money smell?
No, they just don't like them. They're just like, they're too boring. They want to invest in something exciting, you know. And people
Yeah,
are
well, that's
interested.
great. That's great. You pay for your excitement. The first law of investing is you get paid in cash or in kind. And if you invest in something because it's exciting, you get paid in entertainment value, and you don't get paid in money.
Well, if we
It's the
get
same
paid,
yield.
get paid in losses, I think. But no.
Well, no,
it
but
is-
that's because it's so exciting that
Yeah.
you're paying so much for your entertainment
Yeah, you
that
are.
you
Yeah.
actually have to go into negative money. Yeah,
So is
the
there-
yield's all the same, but it's what coin you want to get paid in.
So is there like a sort of a boredom list of stocks that you know, like Aviva, M&G, that you could like, you know, have on ADVFMs, the top 10 boring stocks?
Well, I mean, yes,
Centrica's like that as well, actually.
I probably own them all.
Hated and
Now,
boring.
Centrica hasn't been boring at all. It's been
Hated.
dying on its backside for the last 5 years. It's a bit too exciting, the wrong sort of excitement. But yeah, I mean, there are a selection of I do own them all. It's got to be said. I own all the boring stocks, and they give me about 25% per annum compound on many years. And if you want to work out how that pans out over 20, you'll be you know, going, oh, that's rather good.
So it could be like the boring investor or the hated the hated asset investor or something like that.
It's called Contrarian Value Investor, and I have a blog on ADVFN. You too can join it.
You've talked me
But
into
yes,
it.
but I mean, it's a classic. It's a classic investment strategy that goes back to the beginning of time. You buy stuff that's good businesses that everybody doesn't, you know, it's too boring. It's too boring. I want to buy something blue sky.
Well, that's like the Warren Buffett strategy.
It's very similar to it's the Benjamin Graham strategy, Warren Buffett modified. But yes, effectively, yeah, because you know you've got up to recently economic growth that compounds. So all you got to do is buy something that's got economic growth baked in. And you buy it and it just grows. However, it's even better if you can buy it cheap. And that's what Buffett says. He doesn't care about the share price, he cares about the value. And when it's worth, when you can buy it for a lot less than it's worth, you buy it. And when you can sell it for a lot more than it's worth, you sell it. And that's all you got to do. Buy cheap and sell, in my case, not cheap. You know, when ARB was 3p or whatever ridiculous price I bought it at, it was cheap and it went up 200% and I sold it. And then it went up another 10,000%. So there is, you know, occasionally it is a strategy that is not, it can make you cry, but it doesn't normally make you cry into poverty. It makes you cry on your way to the bank.
Yeah.
And, you know, so that's what I espouse. And it can be dull and it can be boring, but it's not often anything but quite, you know, lucrative.
Last things that I want to touch is gold. So Clem, you mentioned that gold looks like is moving up. Zach, I want to know also what you think, so then maybe we can see if now is kind of time to see some gold shining.
Well, my views on gold is probably the same as Clem's on Bitcoin. That I don't care whether it goes to $10,000, $100,000. I'm not interested because I don't believe in that market and I don't believe what it's supposed to represent. Obviously, if you give me a gold bar and put it in my hand, give it to me for free, I'll take it. But otherwise, I'll run away, sort of like hobbling because it's so heavy. But otherwise, I'm not interested. I think it's a defunct investment, and maybe there's some value in gold stocks, like you know the small mining plays that just started producing or something like that. But as an asset, otherwise, I think it's just a dead duck. And Bitcoin's success shows how much of a dead duck it's actually been. So
well, if I can find it, yes, I can find it, and if I can get it to you, Steffi, then I'll then you should show this chart, because I think I might just have gone and cracked it, because I'm going, what the devil's going up? And I did some research. And I've discovered something, and I think that's quite interesting. I think Zach will like it too. I might convert him.
Oh God,
but you never know. I might not be able to operate this technology correctly to be able to give you what I want to show you. But hold your horses for a second while I point and click. Now, what I did, because I go, well, you know, I was you know, born in the 90s, but I still kind of have a memory of the 70s in a strange way that I can't quite explain. And of course, gold went through the roof in the 70s. And therefore, why isn't, now if 70 like inflation's back, why isn't it going through the roof? And that was my, you know, my interest and my worry and my concern. Now, I'm going to paste this into your chat window.
Yeah, otherwise try on Skype if it doesn't work.
Let me do it in Skype. Let me do it in Skype because I know my Skype. And anyway, I'm sending you through a chart, and I'm not going to tell you what's on it until you get it, until you paste it up. There you go. You got Skype.
No.
So what I've done is I took inflation, and I took the 1970s to the 1980s, and I plotted the progress in percentage of gold. And what you see is quite interesting.
Just give me a second.
One, right? Where are you?
Okay. It's just showing up everything. So
so I think this is the key to gold and what's going on with gold. And as you say, it is starting to move. It feels like it's getting a little bit of pep, but I mean, you know, it could flatter to deceive. And I did drop quite a few bars a few weeks ago out of exasperation, because I thought I shouldn't really be up to my ears in this thing if I don't understand it. But now I think I've got a little bit of a handle on it. You got it?
Yes, but it doesn't open properly.
Is this anything to do with the dollar, Clem?
I'm gonna.
No, it's to do. How can I actually share it with you for my?
You can. I think, Clem, that would be better. So just click.
Okay. Let me do that without revealing all my private keys to the universe.
Yeah, because otherwise it's just gonna share all my stuff.
Okay. So how do I do that?
Just share screen at the bottom. You see there is like a timeline.
Oh yeah. Okay. Right. Chat, record, stop, participants, Q&A chat, share screen. Here we go. And I want to go share. And they're going to say, oh no, they're not.
Yeah,
you see that now?
That's it. We can. Wonderful.
You can see it now. So this is the progress of gold from 1970 to 1983. Yeah. And it goes up 400%. And if you look at inflation, it goes up 200%. So gold actually goes twice as much as inflation over that period. However, between 1974 and so 1975, it's gone down. 1976, it's gone down. 1977, there's a dip in the middle of all this run of inflation. And it hasn't gone up every year, but it's gone up in fits and spurts. But it's outperformed inflation by 100%. But nonetheless, in a year with catastrophic inflation, i.e. the oil shock, etc., it's actually gone down a bit. So I think we may be in that dip there, or maybe not. Maybe we're in an earlier dip. But gold doesn't track inflation like tick by tick, but it does track the tendency. So this is the straw that I'm clutching to in the storm that is the financial markets.
Okay. Wow.
So what do you say, Zach? Convinced or not?
Keep clutching, dude.
What's that?
Keep clutching.
Oh, keep clutching. Yes.
No,
So
I'd like you to be right. I think it is one of the great mysteries. I have my own explanation that gold and the dollar are pegged in a certain way, so they can't have gold going up because it would destroy the value of the dollar and the US would be in the toilet. And so basically there's just a massive short somewhere in gold, probably on COMEX, and they just keep maintaining it at a certain level. It's tethered.
It does feel like that, but like all these pegs, at some point they break.
Yeah, no, it's like what was that, Euro Swiss, or what was that time, the Euro Swiss?
Yeah.
I love that. So I think the only scenario where you're going to be right, which obviously would be a great scenario nonetheless, is that that secret peg for some reason is broken.
I'll tell you a funny story about that Swiss peg. I was looking at the peg, and it would go between like 115 to 120 to the dollar, or whatever that range was. And it hit 120. I thought I should short this because it's going to go down to 115. And then I thought, can't be asked, for 5 cents. And then bang, 40 cents. Oh, okay. I would have been spectacularly right for completely the wrong reasons. But as I was completely wrong for the right reason. Anyway, I'm afraid I must dash. Hasta la vista.
Yep.
Thank you.
Time to go. Thank you, Steffi. It's been great
Thank
this
you,
time.
Zach. It was great to have you on. Thank you
Okay.
for everybody.
Cheers.
Good to see you all.